Hey everybody, Allison here. I am the Director of Risk Tolerance as well as an options specialist here at Simpler Trading. And in today's video, I want to walk through a strategy that I have used quite a bit in the last year to play around Fed news events like we have this week. And this is the compound butterfly strategy. Some of you might be familiar with it. This is a class I taught here at Simpler a little while ago. In the class, it teaches different ways that you can combine butterflies to have a very high probability for a win. And in this particular case around Fed news, I usually combine two debit style broken wing butterflies. One on the call side, one on the put side, with the idea that if we see volatility, right, whether it's up or whether it's down, there's a good probability that it will hit my strikes and I can lock in a profit covering the risk on the other side. And sometimes using this strategy, it actually gives me the flexibility to take profits on both sides. For example, back here was a Fed news day where the market initially bounced up off of what Powell said, and then it overnight kind of digested that news and was like, hey, I actually don't like this, and then we sold back off. In the mastery, we were able to take profits on the call side, and then by the end of the week still took profits on the put side. So that isn't always how it works. Let me be mindful of that. And I do also want to point out that on the last CPI data that we had, it wasn't as volatile as it typically is. So no matter what, the only thing that we can truly control is our capital risk that we put out there. So we'll be mindful of that as we set up trades today. But let's go ahead and talk about levels. So 4,100 has been a pretty big level for the underlying price. We hit it more recently and stalled. That's actually where we stalled off of the CPI and the Fed news back here. And even though we had a bounce up on Powell on November 30th, we still ended up seeing the price stall in that range too. So it has been a price level both last year and to this year that we want to be aware of. Let's go to our option strikes over here. Now, ideally, I would love to try and encompass this range, but we are trading at 40.44. The anticipated range for this week's expiration on Friday is about a $94 range up or down. That, of course, encompasses the Fed news. So it might be a little close, but let's go ahead and price it out. The 4,100, 40.15, 40.25 is about a 210 cost basis. That's a little bit rich for what I prefer on the 10-15 spread width, because keep in mind, we also have to pay for a put broken wing butterfly. So let's go with the idea that if we do start to see some really bullish sentiment off the Fed news, that we could actually start to break this price level. If we do we have any other targets that we could play to the upside? Well, back here, 40.20, 40.25 certainly doesn't seem like a bad spot to consider. If we check out the weekly chart here, of course, our next big resistance on the weekly chart's all the way up at 4,200. That's a ways away, certainly. Let's see if we're about to run into monthly support. We're actually right at monthly resistance, excuse me. So kind of the next place for me, at least, is that price level around 40.20, 41.20 up into maybe 41.50 range as a psychological level. So let's see if we can move our strikes to kind of encompass that range a bit more. So that's still about $2. So they're keeping the premiums in here right now. Keep in mind, you don't technically need to open this strategy today. You could always wait a little closer into Wednesday to open it. I would, though, open it prior to the announcement on Wednesday, so you can play the actual announcement itself. But here, this isn't looking too bad. So the 41.25, 41.40, 41.50 is about a $1.70, $1.65 cost basis. So if the news can really have us push above 4,100, going into that next range, we're still within the 100-point anticipated range for the week. We're right by kind of that next price level. You can see there's plenty of open interest around these levels here. And right now it's about $1.60. But keep in mind, just like we talked about, we would have to also open a put broken wing butterfly, because I personally have no idea how the market's going to react off of the Fed news. All I know is that there's a good chance for potential volatility. So to play to the downside, of course, 4,000 is a really good target that's right at daily support. It's a very big psychological level to potentially play down into. And currently, that's also close to a $2 cost basis, which makes sense, right? It's about 40 points away from where we're at. The next, though, level that I would note is, of course, we have a lot of moving averages and support around 3,900. That's been a pretty big level for the underlying price this past year to be mindful of. So kind of like what we did to the upside, let's meet in the middle a little bit. There is some price support around 3,970. So let's try and play closer into that range. Maybe 3,975, 3,960, 3,950. That's about $1.65. So overall, $1.50. Overall, the cost basis between the two spreads is right around 320, right? It is about $1.60 on the one side and about $1.60 on this side. Usually I like to keep the price at $3 or less. So that might mean that I, need to adjust my strikes a little bit more. But here's the reason why, right? The idea is that if we stay within the anticipated range, which keep in mind, both of these are, either within 90 points or less than 90 points out of the money on each side. So if we can stay within the anticipated range for the week and we get that volatile move either up or down, the idea is on a 10 point spread, your pin, right, would allow for a profit of $1,200. It takes care of the risk on the spread that's out of the money and locks in a profit on the one that is in the money. But let's say it's a big volatile move, right? Sometimes on these Fed days, we can see 140 points within a day, right? 100 points within a day. That's certainly not out of the question. So let's say all of a sudden we do start to sell off and are at 3,900, or we do really pop to the upside and we're at weekly resistance at 4,200, and our put or our call butterfly are completely in the money. Well, this is why I like the debit style broken wing butterfly, because note, our debit spread is the 15 point side of the spread, whereas our credit spread is only 10. So the idea is if this goes completely in the money, it still allows for an overall profit of the difference of spread width. So the difference of these two spreads, 15 minus 10 is 5. So $5 is what the butterfly would settle for. We paid $3 for both our butterflies, which means our cost basis of our total locked in profit is around $2. And so still not a bad risk versus reward where you are able to play either direction. And so once again, right, you could look to put this on earlier in the week. You could wait until maybe tomorrow into the close to put this on. But I would have this strategy on prior to the Fed news and going into the end of the week. Because, of course, if you get one of these moves back here, right, where it causes volatility in either direction, like we've seen back here, or even just the opposite, like what we got off CPI here, where we gapped down but then bounced back up, it still allows for that profit on potentially both. And so that's what I'd be looking to play this week. Thanks, guys, so much for joining me in this video. I hope y'all have a great rest of your trading day. As always, may the trade be with you, and I look forward to talking to you next time. Bye.
Hey, Allison Ostrander here, Director of Risk Tolerance at Simpler Trading. Thanks for watching the video. If you enjoyed this video, please be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. As always, may the trade be with you, and we'll see you in the next video. Bye.